10th in Africa, with a stock of 47.36 billion US dollars. Yes, $47.36 billion by the end of 2023. FDI inflows in 2023 amounted to $1.35 billion, with 13,000 jobs expected to be created once projects reach full capacity. Key sectors attracting investment include oil and gas, gold mining, agriculture, manufacturing, services, and export trading. Major investing countries include South Africa, the Netherlands, France, Mauritius, China, the UK, and Australia. Ghana offers a democratic governance system, a large labor force, abundant natural resources, and tax incentives to foreign investors, although challenges such as bureaucracy, infrastructure gaps, and occasional power and water shortages remain. Hello, good afternoon. Welcome to the Afternoon Business Review, where we tell you what is moving your money and markets. A good time to let you know what is happening. A good time to let you know what is happening on the commodities market. How much is crude oil, gold, and cocoa being sold on the global market? Let's start with crude oil. Crude oil is selling at $85 per barrel. The price is now down from the $87 per barrel it was sold on Thursday. Crude oil has decreased, that is the price of crude oil has decreased by $2. Gold is being pegged at $4,645 per ounce. The price is now up from the $4,458 per ounce it was sold on Thursday. The price of gold has increased by some $187. And cocoa is priced at $5,920. The price is now down from the $6,127 it was sold on Thursday. And I'm talking about per ton. So gold is sold per ton on the global market. The price is now $5,920. Cocoa price has decreased by about $207. $207. I'm so excited about the price of cocoa, and I'm sure you know why. It's pretty obvious. But the price is now going down. We hit 6,000. It's now 5,000. We pray it goes up within the course of this week. Let's go straight to the interbank market to find out how much the commercial banks are retailing the major currencies. I'm talking euro, the British pound, and the US dollar. The dollar is selling at 11 cedis 12 pesos. 11 cedis 12 pesos. But if you want to buy, you are likely to buy a dollar at 11 cedis 11 pesos. The pound is trading at 15 cedis 17 pesos. If you want to buy, you are likely to buy 1 pound for 15 cedis 16 pesos. You're likely to buy it at 15 cedis 16 pesos. That's the British pound. And the euro is going for 13 cedis. 13 cedis. That is if you are selling. But if you want to buy, you'll get it at 12 cedis 98 pesos. And I'm talking the prices or the rate at which the commercial banks retail these currencies. So your bank, such as maybe your Cal Bank, Omnibasic, Standard Chartered Bank, ABSA, UMB, and all the commercial banks, these are the figures you are likely to see on their dashboards. Remember, these figures may be higher or lower at the forex bureaus, and I'm talking the regulated forex bureaus. Remember, it is illegal to go to the black market. It is a crime. Both the buyer and the seller could be arrested. So don't go to the black market. You are on the Afternoon Business Review. My name is Oye Ankrah. Many thanks for joining us to talk business over lunch. It's always a pleasure to come your way to have a look at the stories that are shaping the Ghanaian economy. What are the policies? We bring you what is happening on the Ghana Stock Exchange, the interbank markets, as you heard, the commodities market. You know what is happening to fuel prices. Because whatever happens to fuel prices on the global market impacts us. We import so much fuel. Let me bring you some stories that are shaping the Ghanaian economy. What are the policymakers saying? Now, the government has once again exceeded its treasury bills target by 162.9%, recording one of its strongest levels of investor participation in recent years. Data from the Bank of Ghana show that investors tendered 14.27 billion cedis across the 91-day, 182-day, and 364-day treasury bill tenures, against a target of 5.43 billion cedis. There's more in the following news desk reports.
Despite the robust demand, the government accepted 5.85 billion cedis in bids, rejecting approximately 8.41 billion Ghana cedis worth of investor submissions. The 364-day Treasury bill attracted the largest share of investment interest, with 9.94 billion Ghana cedis tendered. However, the Treasury accepted only 2.69 billion Ghana cedis of those bids. The 91-day bill received 3.12 billion Ghana cedis in bids, with 2.40 billion Ghana cedis accepted, while the 182-day bill attracted 1.20 billion cedis, of which 766.21 million Ghana cedis was accepted. Looking ahead, the government is seeking to raise 5.15 billion Ghana cedis through the issuance of 91, 182, and 364-day Treasury bills at its next primary market auction.
And that was a news desk report. Now, the Minister of Finance, Dr. Kasiala Tuforsen, says Ghana has significantly reduced the proportion of its national revenue used to service its public debt. According to him, the country previously spent more than 50% of its national revenue on debt servicing, leaving limited resources for critical sectors of the economy. He said the situation has now improved, with Ghana spending less than 20% of its revenue on servicing its debt.
This particular agreement is important because debt restructuring is not always about just the numbers. It has to do with the people of Ghana and our citizens. It means less pressure on the national budget. And obviously, the people of Ghana will have an opportunity to experience more health care because we are reducing the amount we use to service the debt. And the people of Ghana will be able to see more schools, more roads, and more social infrastructure. Obviously, all of that will be built as a result of this restructuring that we are going through. For every Ghanaian, it means that more of our national resources can be directed towards improving lives rather than servicing unsustainable debt. To levels where in the past we noticed that Ghana was spending about 55% of our national debt and national revenue just to service debt. That was the level we got to. And when you are confronted with a situation like that, then it means that clearly you won't have opportunity to take care of public good, public services will be the one that will suffer. Less schools, less hospitals, and less social care. And so today I'm proud to say that we have made some considerable progress. Today we are spending less than 20% of our total revenue to service our debt. And that obviously means that, unlike the past, we can spend more and to take care of public infrastructure.
Well, you heard the Finance Minister, Dr. Cassiel Ato-Forsen. Now, the Dangote Petroleum Refinery says it has expanded its free petroleum products delivery initiative to some 3 or 4 actually states in Nigeria. A move, it says, is expected to reduce distribution costs for independent petroleum marketers and create room for lower petrol prices. According to a statement the company issued, the initiative, which initially covered Lagos, Ogun, Rivers, Kaduna, Abuja, and Delta states, is designed to bring petroleum products closer to marketers and retailers while eliminating the cost of transporting products over long distances from the refinery to different parts of the country. By absorbing delivery costs, the refinery is reducing one of the major expenses embedded in the downstream petroleum product distribution chain. So that's coming from the quarters of Dangote Refinery in Nigeria. Today, for our big conversation, we want to talk about investment. Ghana has been portrayed as an investment or foreign direct investment destination in the country. And in my intro, I spoke to you about how Ghana is ranked 3rd in the region, that is the West African region, and 10th in Africa, with a stock of $47.36 billion accrued through FDIs by the end of 2023, and FDI inflows reached 1.35 billion in 2023, but we made more than that with our stock. So we have our stock, and then the inflows that came in is 1.35 billion dollars. So and we make a lot of these investments, or we attract these investments from the oil and gas industry, gold mining. Of course, Ghana is a gold mining destination. Agriculture, because we have the land, especially cocoa, manufacturing services, and export trading. And our major investment countries include South Africa, the Netherlands, France, Mauritius, China, the UK, and Australia. It means that people are invested from these countries, South Africa, the Netherlands, France, Mauritius, China, and the UK, plus Australia, gets attracted to what we have, and they come here to do business with us. And when they come in, they bring in those FDI inflows, so they bring the money, to Ghana. So last week there was a program organized by the what we call the GIPC, and they gave us an overview of how much we have made and the commitment that they have recorded. Now, Ghana recorded about $2.6 billion in investment commitments across 203 projects in 2025 alone, which means that in 2025 we got some investors coming in and giving us or starting a project of about 203 and committing a total amount of $2.61 billion to the country or in the country. So based on various projects, they are coming to spend $2.61 billion in the country. That is what they spent in 2025. It means that 2026 could be higher, but if we are still attractive enough to investors out there. Now, According to the central bank, which is the Bank of Ghana, this achievement follows recent improvements in the country's macroeconomic conditions, with inflation declining sharply and the cedi recording significant recovery against major currencies. Speaking at the launch of the 2025 annual investment report, the governor of the Bank of Ghana, Dr. Johnson Esiama, said the figure reflects renewed investor confidence in Ghana. He added that the task now is to translate the investment commitment into greater production, stronger local enterprises, and sustainable jobs. Let's listen to him.
What its findings represent in the report. A reflection of renewed confidence in Ghana's economic prospects. Investment, at its core, follows confidence indeed. Investors seek environments where policies are credible, where institutions are dependable, and economic conditions are predictable. The report demonstrates that despite global uncertainties and subdued investment flows in many parts of the world, Ghana continues to attract meaningful investor interest. During 2025, Ghana recorded new investors valued at approximately $2.61 billion across 253 projects. This is a strong indicator. This is a strong indication that investors continue to see the opportunities that exist within our economy. Equally important is the quality and nature of these investments. Existing investors, they are not only maintaining their presence in Ghana, but they are also expanding their operations and reinvesting in the economy. We are also witnessing increasing interest in sectors such as manufacturing, agribusiness, logistics, and technology-enabled services. This trend aligns with our broader economic ambition, i.e., to transition from an economy that primarily exports raw materials to one that creates greater value through industrialization, innovation, and competitiveness. It is also encouraging to see growing confidence among Ghanaian businesses themselves. The participation of locally owned enterprises, including the registration of 71 wholly Ghanaian-owned projects valued at about $686 million. This demonstrates that domestic investors continue to believe in Ghana's long-term potential. Furthermore, the increasing spread of investment beyond Greater Accra is a positive development also. A more geographically balanced investment landscape will be essential in ensuring that economic opportunities are inclusive and that they benefit communities across the country. Colleagues, looking ahead, the opportunities before us remain considerable. Ghana sits at the center of a rapidly integrating African market, and as the host of the Secretariat of the African Continental Free Trade Area, our country is well placed to serve as a gateway for investment in the country. A young and entrepreneurial population, improving infrastructure, abundant resources, and a fast-growing digital economy all reinforce that position. Government reforms themselves are also beginning to yield results. We have initiatives such as the 24-hour economy program, the move to establish a modern Ghana Investment Promotion Authority. We have ongoing digitalization and stronger investor aftercare. These are all steadily improving the ease of doing business. The opportunity now spans established sectors. I can give you examples: agro processing, manufacturing, energy, and ICT, and emerging frontiers in value-added mining, electric mobility, and the regulated digital economy. Colleagues, while significant progress has been made, as I've mentioned, we must remain realistic about the work that lies ahead. Addressing infrastructure gaps, for example, reducing the cost of capital. That is something we are committed to addressing. Enhancing productivity and strengthening the competitiveness of local enterprises. These remain critical priorities alongside preserving the macroeconomic stability that we have worked hard to achieve in these last 2 years.
And that was the Bank of Ghana Governor, Dr. Johnson Pandit Esiama. So he was admonishing the GIPC and all the stakeholders within the investment chain to ensure that whatever challenges that investors are likely to encounter when they commit or actually start production in the country should be addressed. And he spoke about infrastructure challenges and other human resource challenges and all of that, because that is what makes the country attractive to investors. And so we have recorded a $2.61 billion commitment or investment commitment in the country across 203 projects. But if we do not address the challenges, we cannot translate that into actual production. So that was what the Bank of Ghana governor was trying to point at in his submission at the launch of the 2025 investment report or annual investment report. Now, for her part, the Minister of Trade, Agribusiness and Industry, Elizabeth Ofosu Ejari, urged relevant stakeholders to shift its investment strategy from simply attracting capital to securing investment that expand production, create jobs, strengthen local businesses, and increase exports. She said the true measure of Ghana's investment performance should not be the volume of capital attracted, but what those investments translate into within the economy. Let's listen to her as well.
The report gives us a useful basis for assessing our progress. It indicates that Ghana attracted about 2.6 billion foreign direct investment across more than 250 new projects and existing companies in 2025. It also points to significant reinvestment by enterprises already operating in the country. I think this number is way below what we really did. I am happy that the CEO of GIPA indicated that they were modest and also didn't add the value of machinery that came into this country. Because on top of my head, Kenya brought in an investment of $250 million. Last year when we went to their headquarters, they were taking this investment to a country who is our friend, so I can't mention. But we were able to convince them to bring the $250 million investment, and we are supposed to commission it next year. Zonda is also almost done with an investment of about 20 million. Sonda, just to mention a few. So I think that sitting on GRA board, I will ensure that our next report will include all these things so that our efforts are actually calculated for. When an investor who has done business in Ghana chooses to commit additional resources here, that decision speaks to confidence in the prospects of our economy. Our responsibility in government is to preserve that confidence and translate it into greater production, stronger enterprises, and lasting economic value. Ladies and gentlemen, we see this connection clearly in agribusiness. When agricultural produce moves from the farm into processing facilities in Ghana, more value remains within our economy, while opportunities are created in packaging, transport, warehousing, distribution, and exports. That relationship between production, processing, and market is central to bringing trade, agribusiness, and industry together within one ministry. It also informs our work in textiles and garments, pharmaceutical, automotive manufacturing, and component manufacturing, agro-processing, and other sectors where Ghana can build competitive industrial capacity. The CEO of DIP has already indicated that we have cabinet approving 4 policies. It shows the direction the country is moving: garment and textiles, component manufacturing, pharmaceutical, and then agribusiness. While the opportunities are considerable, investors must also have confidence in the environment in which they operate. The recent passage of the bill to establish Ghana Investment Promotion Authority strengthens this effort. It gives us the opportunity to modernize investment facilitation and equip the institution to respond more effectively to investors in increasingly competitive global environment. And I think Simon is doing great.
And so that was the Trade Minister, Elizabeth Fusu Ejari, and she was also speaking at the launch of the 2025 Annual Investment Report. Earlier, you heard the Governor of the Bank of Ghana, Dr. Johnson Panditi Siama, and they are basically both of them spoke about how we have to ensure that investment inflows does not or do not only remain, cash or money, or but it should translate into jobs and the creation of more jobs for the people of the country. Otherwise, we cannot actually measure the performance very well. It has to show on the people. The people would have to experience it. The people would have to see what they are getting from all those foreign direct investments. Of course, if you are making as much as $2.6 billion annually, and it should show on the people. A lot of people should be able to get jobs to do. So this has been our show. My name is Oye Ankrah. Of course, this is the afternoon business review. If you want to know what is shaping the Ghanaian economy, the global economy, your money, the market, you should tune in every day at 12:30 to 1 p.m. Let's tell you what is happening. You probably will need to understand a policy or two. Have a good afternoon.